To follow up your comment that housing prices can't go up, what do you consider affordable? The average price in Ontario now is put at $856,000 for a home. How much does that have to come down to be affordable?
The once soaring Canadian housing market is on the edge. Anxiety and uncertainty have gripped the nation. Skyrocketing prices, high debts, and a frenzied rush to buy homes have created a perfect storm. With experts warning of an impending crash, the dream of homeownership for many hangs in the balance. This alarming situation has far-reaching implications, from the stability of the economy to the very existence of Canadian society. In this video, we will delve into the factors fueling this crisis, exploring the consequences for everyday Canadians and the nation's future. Canada's housing crisis is nearing its boiling point. The country is facing a serious housing problem that's getting worse. In 2022, Canada's population went up by over 1 million people, and most of this increase came from immigration. The Canadian Housing and Mortgage Corporation said last year that by 2030, Canada needs to build 5.8 million new homes to make housing more affordable. The cost of homes compared to how much people earn is now really high, higher than it has ever been. This shows just how expensive it is to buy a house. The Bank of Canada's measure of how affordable housing is has also gotten worse because home prices are incredibly high, and mortgage rates have gone up a lot recently.
The Bank of Canada raised its key interest rate to 5% yesterday. That's the 10th rate hike in 18 months. They've now gone from virtually 0 to 5%, the highest level in 22 years.
For more than 20 years, borrowing money to buy homes was easy in Canada, and banks weren't very strict about whom they lent money to. Now, the country is in danger of a housing crash because houses are so expensive that many people can't afford them. Some people hope that the situation will get better slowly, but there are problems like higher mortgage rates, the cost of borrowing money to buy a house, and fewer job opportunities, which make the situation worse. This expensive housing issue started back in the early 2000s when Canada made a lot of money from selling valuable things like oil and minerals. This made the Canadian dollar stronger, which wasn't good for businesses that sell things to other countries because it made their products more expensive. So the Bank of Canada made it easy for people to borrow money to buy houses, to stop the Canadian dollar from getting even stronger. The fear of having a very strong Canadian dollar got even stronger after the U.S. housing market crash in 2008. Even though the Canadian economy was quite different from the U.S. economy back then, the Bank of Canada copied what the U.S. Federal Reserve did mostly. At that time, the prices of things in Canada didn't go up much, so there wasn't a big reason to make borrowing money more expensive. Because interest rates stayed low for a long time, it made houses more and more expensive. Now, buying a house in Canada is almost impossible for many people. The price of houses compared to what people earn is incredibly high, like never before. But what's even scarier is that people owe a lot of money because of their mortgages, money borrowed to buy a house. It's nearly 140% of what people earn. And if you count all the money people owe, it's a huge 180%. Which is much more than what was happening in the U.S. before their financial crisis in 2008. This makes it more likely that people will have to sell their homes and not be able to pay their debts, and it could hurt the financial system. For many homeowners in Canada, paying their mortgages has become tough. The amount of money people owe on their mortgages compared to their income has gone up a lot, much higher than what was happening in the U.S. when they had their housing crisis. What's tricky in Canada is that people can't easily get long-term fixed-rate mortgages to protect themselves from higher interest rates. Now, there's a big problem because more and more homeowners can't keep up with their mortgage payments when their interest rates go up. Some of the big Canadian banks say that around 1 out of every 5 mortgages they give out has a big problem, where the payments don't even cover the interest, which means they have to make the mortgage bigger and last longer. And about 1 out of every 4 mortgages now lasts more than 30 years, which is usually not how it works. If mortgage rates don't drop by a lot, Canadian banks and other lenders will have to deal with more and more people who can't pay their mortgages when the interest rates go up. This could get worse if there are fewer jobs available, making it even harder for people to make their mortgage payments. When we talk about the biggest housing bubbles in history, Japan in the 1990s stands out as the grand champion. And it's like they put extra icing on that cake. Real estate in Japan was so incredibly expensive during the 1990s that even in 2022, it hasn't fully recovered. It was unmatched for many years in the world of housing bubbles. But now Canada is stepping into the spotlight. Canada is facing a perfect storm of problems. People are confident about the housing market. There aren't strict rules for foreign buyers who want to invest. Interest rates are unbelievably low. Younger generations might not fully understand the risks. Some investors are being too greedy, and home prices just keep going up without taking a break, like what happened in the US in 2008. All of this is making Canada's housing market look like it's on the edge of becoming one of the biggest housing bubbles ever. For example, a family home in Brampton was sold for 5.6 times what it was bought for in the early 2000s. To make matters even more extreme, the amount offered to buy the home was 1.75 times what it was worth in 2002, showing how much people are willing to pay to get a house. The housing situation in Canada is indeed concerning, but it's not necessarily worse than Japan's historic bubble. Each housing crisis has its unique characteristics and challenges. Canada did not experience the same kind of correction that many other countries faced in 2008 due to the global financial crisis. Housing prices continue to rise, contributing to the current situation. While Canada's housing was already expensive compared to some countries in 2008, like Japan, Germany, Italy, and the US, it's important to remember that the harshness of a housing bubble depends on a combination of factors, such as the level of private debt, interest rates, government policies, and economic conditions. One notable difference is that Canada has higher private debt levels compared to Japan during its 1990s bubble. This elevated debt can amplify the risks associated with a housing bubble, as it makes it more challenging for individuals to manage their mortgage payments if interest rates rise significantly, or if the housing market experiences a downturn. The soaring home prices in Canada can be attributed to several key factors. Let's take a closer look at them. Number 1, lack of a necessary 2008 housing correction. Unlike many other countries that experienced a correction in the housing market during the 2008 global financial crisis, Canada did not see a significant downturn in housing prices at that time. This allowed prices to continue rising without a necessary correction. Number 2, lack of foreign investment regulations. Canada did not have strict regulations in place to curb foreign investment in its real estate market. This absence of regulations allowed foreign investors to assume Canadian properties, driving up demand and prices. Number 3, generational ignorance and FOMO, fear of missing out. Some younger generations may not fully understand the risks associated with buying homes at such high prices. FOMO can lead individuals to rush into the market, driving up demand further. Number 4, overconfidence and investor activity. The housing market's stability and consistent price increases attracted not only first-time home buyers, but also investors seeking profitable opportunities. This influx of investors further increased demand and competition. Number 5, ridiculously low borrowing rates. Historically low interest rates set by central banks make borrowing money to purchase homes very cheap. This affordability usually tempts more people to enter the housing market, driving up demand and subsequently prices. These factors combine to create a situation where home prices in Canada reached unprecedented levels. However, it's important to note that such a complex issue often requires a combination of policy changes, market dynamics, and economic shifts to address effectively. Despite hopes for a gentle landing in the housing market, history tells us that bear markets can turn into a tough situation when we hold on to hope too tightly. To make things better, we'd need mortgage rates to drop a lot, and quite some time before the next economic downturn when jobs might become scarce. But with the way things are going, it's getting harder to make that happen because prices are going up, making it more difficult for people to afford homes. Some citizens think that because there aren't many houses available, prices won't fall too much. But this idea isn't well supported. We've been building a lot of new houses for a while now, even more than the number of new households being formed. So it won't be long before we start seeing the effects of this in the housing market. Plus, while there aren't many unsold homes right now, that could change if fewer people want to invest in them. And there are a ton of new houses being built as we speak. Others believe that more immigrants moving in will create more demand for housing. But the problem of houses being too expensive will still be a big hurdle. Are we only attracting rich immigrants? Or can we give them jobs that pay much better than what Canadians currently earn? If not, even new immigrants will struggle to buy homes. When prices go up too fast and there aren't enough buyers, that's a recipe for a big problem. The possibility of a housing problem makes us wonder if it will be like what happened in the US after 2008, when they had to deal with a long and tough situation. The US can give us some ideas on what to expect, but there are differences. The world economy is in better shape now, so if the Canadian dollar loses value and exports pick up, it could help balance out the lack of demand from households. Also, because prices are going up, if we have higher inflation, it might mean that home prices adjust more in terms of what they're worth, rather than just the numbers on paper. No matter what, Canada is in for a challenging decade when this housing bubble starts to go down. Our leaders and policymakers will have a tough job ahead as the day of facing these issues is coming up fast. What do you think?